On your side, also continuing to dig deeper into the questions you asked us about the president's new payroll tax deferral plan. It's now in effect. 7 on your side troubleshooter Horace Holmes looks at the impact it could have on your personal finances.
Certified public accountant and financial planner Kevin Bradley is here to answer your questions on the payroll tax deferral plan. Let's start with an overview. If you make less than $4,000 every 2 weeks, you can opt to defer having your Social Security and Medicare tax payments for the remainder of the year.
What that means is they don't actually have to pay it until the period beginning January 1st, going through April 30th, 2021.
One viewer asked us on Twitter if taking part in this is a good idea.
If the employee has a reason to believe that they'll have a better cash flow situation in 2021 than they are in the last 4 months of 2020, it might not be a bad idea.
But the taxes that aren't withheld for the rest of this year will come out of your paycheck along with your normal withholdings in the first quarter of next year. That's why Bradley says be very careful.
It's so easy for people to fall into the trap of spending what they have and then scrambling for ways to pay back what they owe.
Another viewer asks, what if I'm laid off or have to leave my job?
It's unclear right now as to how they're going to enforce this, particularly for employees who may leave their employer in early 2021 and not all the taxes have been paid back.
And another viewer says, I don't have a job right now. Is there anything in this to help me?
This does nothing to help people who are unemployed.
Still a lot of questions to be answered. You can see my full interview with Kevin Bradley along with some resources that will help answer your questions about this program. I've tweeted out a link at ABC7 Horace. Back to you.
Well, it's